If you're a real estate investor in Florida and you keep running into the same wall, the bank says your personal income doesn't support another property, this video is going to change how you think about that. Because your personal income isn't the only way to qualify for a mortgage on rental property, and for serious investors, it probably shouldn't be. Let me explain how the DSCR loans work and why they become one of the most important financing tools for investors building portfolios in Florida right now. DSCR stands for Debt Service Coverage Ratio. It's a type of non-QM loan, non-qualified mortgage, that qualifies you based entirely on the rental income of the property, not your tax returns, not your W-2s, not your personal debt-to-income ratio, just the property's ability to generate income and cover its debt. Here's the math. The lender takes the monthly rental income of the property and divides it by the total monthly debt service. That's the mortgage payment plus taxes, insurance, and any HOA fees. That gives you your DSCR. A DSCR of 1.0 means the property breaks even. The rent covers the payment exactly. A DSCR of 1.25 means the property generates 25% more than what is needed to cover the loan. That's a strong approval at most lenders. So let's say you're looking at a property that rents for $4,000 a month and the total monthly payment is $3,200. Your DSCR is 1.25. You qualify, regardless of what your personal tax returns show. Now, here's why this matters specifically in Florida. This is one of the strongest rental markets in the country. Long-term rentals, short-term rental, vacation rentals, multifamily, the income potential here is very real. But traditional banks cap you based on your personal finances. They look at your debt-to-income ratio, they require W-2s and tax returns, and for most investors who've been writing off legitimate business expenses, that picture does not reflect reality. DSCR loans bypass all of that. The lender cares about the asset, not your personal income. Does the property cash flow? That's the question. Let me run through what lenders are looking for in 2026. Most programs require a minimum DSCR between 1 and 1.25%, but some go as low as 0.75% for strong borrowers. Your down payment is typically 20 to 25%, but there are a few programs that allow 15% for borrowers with really strong credit. Credit score requirements generally start at 660, and rates right now are ranging from roughly 6 to 7.5% for qualified borrowers. They're down significantly from where they were in 2024. A few things investors often get wrong about DSCR loans. Number one, you can use a DSCR loan for a short-term rental property like an Airbnb. Most lenders will use income from platforms like AirDNA to calculate the DSCR, which is a big deal in markets like Orlando and coastal Palm Beach County, where short-term rental income is significantly higher than long-term rental comparables. Number two, you can take title in an LLC. DSCR loans are one of the very few mortgage products that support an LLC vesting. If asset protection and entity level ownership matter to your strategy, this is a major advantage. Number three, there is no limit to how many DSCR loans you can have. Conventional loans cap you at 10 financed properties. DSCR loans have no such gap. Each deal qualifies independently based on its own cash flow. And number four, you don't need the property to already be rented. If it's vacant, the lender uses the appraiser's market rent estimate. You don't need an existing lease to qualify. These loans also close faster than conventional investment loans, typically 21 to 34 days. Because there's no personal income documentation to chase down, the timeline is driven by the appraisal and title, not underwriting of your personal finances. At Interconnect Mortgage, we work with multiple non-QM lenders, which means when you bring us a deal, we can shop it and find the best combination of rate, down payment, and terms for your specific scenario. Whether you're buying in Florida, Georgia, or South Carolina, if the property cash flows, we have a program for it. I've linked the calendar below. If you have a deal you're evaluating or you just want to understand what you qualify, book a quick call. We'll run the numbers with you and give you a straight answer. If this was helpful, subscribe so you don't miss the next one. We cover DSCR loans, bank statement loans, and non-QM programs and everything in between for investors and self-employed borrowers who don't fit the traditional bank mold. See you in the next video.